How's it going, guys? Brendan here. So this past week was dominated by a lot of negative news. The news was surrounding George Floyd, racism in America, and some protests that turned violent. But there was actually a lot of positive things that happened this past week as well. Stocks rose for the third straight week, oil jumped, and treasuries hit an 11-week high following a surprising gain in payrolls last week. The U.S. economy added 2.5 million jobs. The unemployment level dropped to 3.3% following April's record level, and this suggests that the U.S. economy is recovering faster than previously thought. And now let's get into all the details, and make sure you stick around to the end, because I always like to add a funny, weird, uplifting story so that we all start the week on a positive note. Here we go. So it was another great week for stocks. Small cap stocks were particularly strong, and value outperformed growth by a wide margin. Within the S&P 500, energy shares did well on news that OPEC and other major oil exporters would be scaling back production. Financial shares were helped by a rise in long-term interest rates, which boost banks' lending margins, while consumer staples and the healthcare sector lagged. So how did the markets actually do? Well, the S&P 500 was up 4.9% in the week, the Dow Jones Industrial Average was up 6.8%, Russell 2000 up 8.11%, and the MSCI EAFE was up 5.5%. Now, year to date, the S&P 500 is only down 1.1%, which is amazing to me considering all the negative news we've had. The Dow Jones Industrial Average is down 5%, Russell 2000 is down 9.7%, and the MSCI EAFE is down 10.6%. So while the S&P 500 did great last week, it was actually the worst performer of the four indexes I track. And this just shows the importance of diversification. You have to diversify within sectors, within asset allocations, within market capitalizations, and internationally. So my investment strategy is an index-like approach. I invest in the indexes, but then I overweight towards small cap and value stocks. And that's because historically, small cap and value outperform large cap and growth stocks over longer periods of time. If you'd like to learn more about my investment strategy, I'll put a link to a video here. So last week's market rally came despite the worst civil unrest we've seen in decades. Nationwide protests incited by the killing of George Floyd and the ensuing outrage over police brutality continue. The National Guard reached historical levels of deployment. Marches sprouted in normally small, quiet towns, buildings and cars were set ablaze, and there was tensions between protesters and police. But nevertheless, stocks climbed higher, and this is in part because of a strong rally on Friday after the Labor Department released its May jobs report. Unemployment in the U.S. declined, while employers added 2.5 million jobs. Historically, markets tend to be unaffected by civil upheaval, especially if investors believe that it won't affect the broader economy. As an example, let's look at the year 1968. There was low unemployment and relatively low gas prices, but tensions were building across the country. The U.S. was in the midst of the Vietnam War, inflation was rising, and a viral influenza killed roughly 100,000 Americans. Sounds a little familiar, right? Racial tensions had been building, and in April, Martin Luther King Jr. was assassinated. His death set off a wave of nationwide rebellion. Yet, in the week following his death, as many around the nation protested, the S&P 500 rose 2.9%. 1 month after his assassination, the benchmark index was up 5.1%. It gained 7.7% that year, defying all of the turmoil that the U.S. faced. So historically, it's nothing new that the markets would do well, even though there's a lot of tension in the country right now. Many experts are warning that there'll be an increase in virus infections following the reopening of states and all of the protesting with people so close together. So far in the U.S., there have been 1.87 million confirmed cases and more than 108,000 deaths. Last week, 1.9 million Americans filed jobless claims, so the downward weekly trend has continued. Every week since March 14th, fewer and fewer people have made jobless claims. Last month, employers added 2.5 million jobs in the U.S., which is the largest increase in a single month since they started recording the data in 1948, and the unemployment rate dropped to 13.3%. I remember a month ago, analysts were saying that they expected the unemployment rate to be above 20% in May. And I guess they were wrong. And that goes to show you that you can't listen to forecasters or analysts, because oftentimes they are wrong, especially when it has to do with the stock market. While 13.3% is still a relatively high unemployment number, at least we're on the right track. But these large unemployment numbers have left states vulnerable to unemployment fraud, largely due to identity theft. Many states rely on outdated technology systems that leave them susceptible to fraudulent claims. It was estimated in 2019 that about 10% of all unemployment payouts were improper. So in other economic news, U.S. exports and imports posted their largest monthly decrease on record. Imports fell 13.7% from March to April, and exports fell 20.5%. This is the largest decline since record-keeping began in 1992. It is thought that global trade flows may start to pick up again as some factories reopen and the easing of social distancing measures revives consumer demand. So 2 weeks ago, President Trump said that the US would rescind Hong Kong's status as a largely autonomous Chinese territory. This could remove some of their trading privileges. At stake for Hong Kong is a sizable trading partnership and access to some of America's key technology exports, including sensitive ones such as telescopic lenses for guns, satellites, and computer chips. The US is Hong Kong's second largest trading partner after China, but by contrast, Hong Kong is only the US's 21st largest trading partner. While President Trump plans to eliminate Hong Kong's trading privileges, he hasn't really provided a lot of detail into exactly what that means or when it will happen. As the quarantine progressed, many of us have gotten used to learning and working remotely from home. And there's some talk that companies may continue this remote work for at least a portion of their workforce. But is this really what's best for us? A survey published in April estimates that 50% of the US workforce is now working remotely as a result of the virus. One company that suggests that they'll continue this remote work for their employees is Facebook. They said that they expect potentially half of their employees to work remotely within the next 5 to 10 years. They cited stable productivity from at-home employees so far and the promise of untapped, potentially less costly, remote talent as compelling benefits. The trade-off to working remotely is potentially not being as aligned with your employees. When you're in an office, there's a lot of free-flowing talk and conversation that you don't get when you're working from home. In addition to working remotely, we've also been thrust into this big nationwide experiment of learning from home, and reports show that this is largely a failure. The problems began piling up almost immediately. There were students with no computers or internet access, teachers had no experience with remote learning, and many parents weren't available to help. In many places, lots of students simply didn't show up online, and administrators had no good way to find out why not. Soon, many districts weren't requiring students to do any work at all, increasing the risk that millions of students would have big gaps in their learning. Preliminary research suggests that nationwide, students will return to school in the fall, having only obtained about 70% of the reading gains they would expect from a normal school year and about 50% of the math gains. And this is expected to be worse for minority and low-income children who have less access to technology and whose families are more affected by the economic downturn. So now my funny, uplifting, weird story for this week that I promised. So do I have any chocolate lovers out there? My wife and I are huge fans of chocolate, and if you are too, then you're going to wish you were in Germany this past week. In the town of Wörl in western Germany, a tank of liquid chocolate overflowed and poured out onto the street. About a ton of chocolate ran out into the yard, and from there onto the street. The chocolate took up about 108 square feet when all was said and done, and I can promise you if my wife and I were there, we would have been eating it off the street. So was there anything I missed from this past week? If so, let me know in the comments below. Also, if you like this video, please hit the like button and subscribe, and hit the little bell icon so you don't miss any future videos. Have a great week. Take care.